Welcome back, everyone. It is Tuesday, October 17th, after market hours. Welcome back to NYU Grads Daily Podcast. This one's going to be a quick one. We had a continuation day after Monday's bullish rally slash bounce. A couple things to cover that I wanted to make note of. So let's start off with breadth, and then we'll kind of go through some of the other notable things that I noticed today. So we had 125 new highs, but we still are outpacing with new lows at 320. So that's not good, despite, we had pretty much a broad rally today. 55% were advancing versus 39% declining, better. 72% below the 50-day moving average, 66% below the 200-day moving average. What really stuck out today, though, was semiconductors. There was headline news that the U.S. will be banning all exports of U.S.-made chips, semiconductor chips that are AI related to China. This kind of tanked the semiconductors, and NVDA lost, if you count the last 48 hours, NVIDIA has lost over $100 billion in market cap. And what you should all be thinking about is, if we're, as a country, going to ban exports of all AI-based chips to China, what's stopping the administration from stopping chip sales to other countries that are potential future risks or future enemies, right? So this could definitely be a big headwind for chip makers as well as chip manufacturers, like Lam Research, which reports actually later this week. So listen to that earnings call and see what they say about all of this. But, the tail end of this is, I think, the black market for AI chips may also increase in price, right? Like, the harder something it is to get, definitely price will start to increase in the black market. So I believe if NVIDIA goes down to test that 410 area and it does not hold 410, then we're going straight down to like 360, 340 range. So that would be a big sell-off for a Magnificent Seven company. So this is definitely something to now add to your radar. Chip manufacturers, in addition to yield, in addition to oil, in addition to geopolitical risks and headline risks. So things are getting a little dicey out there. What else kind of stuck out? So the S&P 500 Index SPY, was $1 away from its falling 50-day moving average. And I was just watching tick by tick. Are we going to get there today? As I've been saying for multiple podcasts, we're eventually going to test that falling 50-day moving average. We barely got there. We were $1 away, and then we started to sell off throughout the day. So if you take a look at the complexion of the day, it was green for the Dow. We closed up barely, but we closed up 13 points. On the NASDAQ, we recovered a lot of the sell-off, but we closed red. We closed down 34 points, or 0.25%. It made its high, the NASDAQ, around 1230-ish, but it couldn't hold it, and then we sold off. On the S&P 500, we obviously gapped down like the NASDAQ. We rebounded right up until 1230 and then sold off and closed barely red, down down 0.43. So pretty much near where we closed on Monday's session. So it on the surface, we didn't go anywhere, okay? But underneath, we still are deteriorating, right? Because we had 320 new lows and only 125 highs, so new highs. So that's not good. And then taking a look at kind of where we were with the Magnificent Seven, obviously NVIDIA was down quite a lot. We closed down 4.68%. Amazon closed down 0.8%. Apple closed down almost a percent, down 0.88%. Microsoft, barely any movement there. Google was actually green, 0.36, and Meta, Facebook, was up 0.89. So that's kind of where we were with the complexion of the day. When you take a look at the futures market, we're already down, but that can go any which way. It can go much further down or back up. We'll have to see closer to tomorrow or the open, the action there. Taking a look at the sectors, we had a mixed bag. I mean, the strongest sector of the day was basic materials and energy. You never really want to see that. And the biggest loser of the day was technology. You never want to see that. But we had maybe 6 out of the sectors in green. I will post that bar chart. That really was the meat of the day. Taking a look at some of these other charts here. If you don't follow me on Substack Notes, I highly recommend it. I kind of post almost intraday play-by-plays. I had mentioned earlier in the morning that once we get to that 44.10-ish level, we are going to hit a strong window or wall of resistance, and we did that. We overshot a little bit to about 44.20, but then we reversed hard and sold off. So definitely follow me there. In the morning before market opened, we had headlines kind of across the tape. It was saying that retail sales rose 0.7% in September, much stronger than estimated. But keep in mind, this is all credit card driven. A lot of consumers are tapped out for savings and they're using credit. Goldman topped estimates, Bank of America topped estimates, J&J also beat. So that really was the bulk of the day. What was strong? You had things like Cheesecake Factory up 4%, Sweetgreen up 4%. The VIX was positive today. Gold caught a bid up 3.8%. Birkenstock finally is catching a break up 3.2%. Kava, the summer IPO, up 3%. So a lot of things that were kind of crushed bounced pretty hard today. And then when you take a look at the loss column in red, I'll post this as well, but just to give you a sampling, NVIDIA down 4.6, Hovanian down 2.3, Ferrari down 1.74, Netflix down 1.4. So it wasn't too bad on the downside, other than semiconductors. So that's all I have to report today. Keep watching the Magnificent Seven, yields, energy, the semiconductors for this chip ban overseas to China, and watch geopolitical risk as well as earnings that's coming out. So that's a lot of things to increase that risk, the baseline of risk. So things are getting a little bit dangerous for equities and risk assets. I will see you guys after the Wednesday session. Have a great one.